I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
The White House press secretary there saying that Presidents Trump and Xi are likely to talk this week as the world's two largest economies remain locked in trade turmoil. Live from the Nomura Investment Forum here in Singapore, this is Insight with Haslinda Amin. Asian shares edge up as investors await news on U.S.-China trade negotiations with a focus on whether Trump and Xi will pick up their phones and dial down tensions. Meanwhile, the dollar is near 2023 lows, with the Wall Street banks reinforcing their calls it will weaken further, hit by rate cuts, slowing growth and Trump's policies. The White House is getting desperate for a win as trade pacts seem elusive, and the one big beautiful bill faces hurdles. To speak to Donald Trump's former chief of staff, Mike Mulvaney, about how things are shaping up for the president. South Koreans are voting for a new president after months of chaos from the martial law gamble by Yoon Suk-yeol. The winner faces challenges, including a slowing economy. And New Zealand's golden visa is said to be shining as the US, the UK and other countries tightened immigration. We hear from the country's former Minister for Economic Development on whether a slowing economy can handle the new arrivals. You're watching Insight. While investors await more clarity on trade and tariffs, the dollar is hovering near its weakest level since 2023, as President Trump's trade policies prompt a rethink of the world's reliance on the greenback, and Wall Street banks are warning of more losses to come. Avril Hong is here with the very latest. Avril.
Yeah, Has, I mean, as you highlighted, the dollar is really in the spotlight, falling amid the resurfacing of US-China trade tensions. And we've seen it falling to almost the lowest level since 2023. The level to watch in the Bloomberg Dollar Index is 1206. If it breaches that, it'll be the lowest since 2022. And these headwinds for the greenback are growing. They could come in the form of weak US data, further escalation of trade tensions, or further weakness in the Treasuries market. Certainly, we've already been seeing them starting the month of June on the back foot, with the long end leading the selling. And of course, we're also keeping tabs on the safe haven demand, gold reversing some of the moves from a day ago. But flip the board, as I said, the focus is on the dollar. And if you look at the weekly relative strength index, it's at the lowest level in 7 years. These bearish calls coming from Morgan Stanley, from JP Morgan, Goldman making an interesting point that Washington's efforts for alternative revenue sources, if their tariff agenda gets impeded, could actually prove even more negative for the dollar. And of course, that could come in the form of the obscure tax item buried deep in Trump's big, beautiful bill. Now, in terms of the positioning that we've been seeing on the dollar, recent CFTC data also suggests that it's not even at extremes yet, this bearish positioning. So that suggests potential for further weakness. Now, flip the board, take a look as well at the dollar and how it's been languishing, even though stocks have rebounded. So that negative correlation has returned. But if you take a look at what we've been seeing for much of this year, it's very much that positive correlation. Some on the MLive team have highlighted that we could see stocks actually kind of matching up to the weakness in the dollar, something to keep an eye on. The point here, Has, is really how, when it comes to the greenback, Trump's policies have prompted this rethink. And even if we see an easing of trade tensions, a potential phone call, that genie, I think, is really going to be very difficult to put it back in the bottle, Has.
That's right. It's all about the big and beautiful. Avril Hong, thank you so much for that. Now, as you heard from the press secretary earlier, the White House says President Trump is likely to speak this week with Chinese leader Xi Jinping. Cracks have started to emerge in a temporary truce between the two countries just 3 weeks after negotiators agreed to reduce tariffs while working towards a larger deal. Each side has accused the other of violating the agreement. And Treasury Secretary Scott Bessent has said talks have stalled. But history suggests these developments shouldn't come as a surprise. Bloomberg Economics points out that Trump's first trade war with China was also marked by several temporary off-ramps and multiple rounds of tit-for-tat trade restrictions. For more on the implications of rising trade tensions, we're joined by Richard Koo, Chief Economist at Nomura Research Institute. Richard, good to have you with us.
Oh, thank you for having me.
We've seen the reaction in the markets, including in the dollar. I mean, how are you reading into where the dollar is right now?
I think we should get hints from Trump's first term on the dollar. At the very beginning, when he was elected, there was another Trump deal 8 years ago, and the dollar went up. And at that time, people said, oh, the Fed is raising interest rates, Bank of Japan and ECB is cutting rates, and therefore the dollar should be going higher and higher. Well, their forecast on monetary policy all turned out to be correct. Bank of Japan did nothing, ECB did nothing, US Federal Reserve raised interest rates 8 times. But the dollar kept on going down and down and down. So those forecasters are completely wrong. Even with the much higher interest rates in the US, the dollar did not appreciate. And that happened because this president has been talking about trade deficit every day. And when the US president talks about trade deficit, and then people look at trade deficit, it's a huge red, which means if no one else is buying, only exporters and importers are buying dollars, the dollar should be depreciating rather rapidly. That was offset by the investors buying, and that's why the dollar remains strong. But when the president of the United States keeps on talking about the deficit, and people have to pay attention to the deficit, and that suggests that you should not be, too exposed to the dollar. So when investors kind of move to the sidelines, not taking large, long dollar positions, exporters and importers are still in the foreign exchange market. They cannot move themselves to the sidelines because they already sold Toyota in the United States or Jeeps in Japan. They have to convert those exchange rates. So in the foreign exchange market, the relative weight of importers and exporters grows, even though they're trading the same amount every day, because the investors' part is shrinking. The share of the exporters and importers grows, and that pushes the dollar down.
The question is where the dollar goes from here. There is quite an agreement that the dollar goes weaker from here. Morgan Stanley says 9% lower from here by the end of, by mid-2026. Your thoughts on that?
Well, I believe dollar will be going lower, but I don't think U.S. would like to see this go lower in disorderly fashion. Because if it does go down in a disorderly fashion, it could have impact on the bond market, stock market. And like 2 weeks ago, Taiwan dollar suddenly jumped 10% in just 2 days. And that was very, very disturbing, especially for the Taiwan financial market. But everybody else also noticed that something like that can happen in other parts of Asia and the rest of the world as well. So I don't think a U.S. government will be deliberately talking down the dollar until maybe some sort of an agreement is reached among G5 or G7 plus China perhaps on what people call the Mar-a-Lago Accord or something, or Plaza Accord number 2. But the markets could still push exchange rate in that direction.
Let's talk about exchange rates and let's talk about yields. We know that yields are headed higher. I mean, at what yield level would it be detrimental for the markets?
Well, let me put it this way. If Mr. Trump really wants to resolve this trade deficit issue, and his supporters are all, I shouldn't say all, but the core part of President Trump's supporters are the victims of trade deficit. And US and the UK, only those 2 countries among the G7, kept on running this huge deficit. The amount of GDP that Americans lost as a result of allowing this deficit to continue, in today's dollars, something like $41 trillion. This is no peanuts. And that was borne by the people who are suffering from trade deficit. Those who are benefiting from trade deficit, I mean, those of us in the financial market, academia, services industry, of course, we are not hurt by strong dollar and the trade deficit. But the other people who are in the Midwest, Rust Belt, they were hurt very, very badly. And it was Trump's genius to recognize that there are so many people unhappy in that part of the world, which both the Republicans and Democrats over the years never paid attention to. So when he started talking about protectionism, we had this whole, groundswell of people beginning to support Trump, which was a shock to both Republicans and Democrats. And now we have Mr. Trump as the president. So he would probably push protectionism as far as it would go before he would move to the exchange rate.
The question is, how much pain will this impose on ordinary Americans? Already we're seeing mortgage rates close to 7%.
Well, if people think that eventually Trump will move toward the exchange rate, he's not doing that now, but eventually he will move that direction, then all these people who are holding U.S. treasuries, especially foreign investors, but many American investors as well, will rather sell that now and buy it back when the dollar is a lot cheaper. But in the meantime, when people are selling these assets, interest rates will go up higher. And that's, of course, a very painful experience for the people who are borrowing money. I'm sure Trump is very aware of this risk. During his first term, even though he talked about the trade deficit, he never talked about the exchange rate directly because he probably worried about the risk that you just mentioned. If he even talks once about intervene in foreign exchange market to bring it down, I'm sure dollar will fall very quickly because of the trade deficit. But the interest rates will go much higher. And as a former real estate person, I'm sure he's very sensitive to higher interest rates. So this time we may go the same way. He may not directly talk about the dollar until it becomes absolutely necessary. But the signs that he's giving suggest that the dollar will be falling, which then means U.S. interest rates could be higher still.
Richard, hang tight. Richard Koo, Chief Economist at Nomura Research Institute, is staying with us. Now, still ahead this hour, we'll head live to Seoul to check how voting is going as South Koreans choose the next president. Keep it here with us. This is Bloomberg. Welcome back to Inside. South Koreans are voting today for a new president after last year's short-lived declaration of martial law led to the downfall of Yoon Suk-yeol and the country's worst constitutional crisis in decades. Bloomberg, the Asia Trade co-anchor Sherry Yan joins us now from Seoul. And Sherry, what are we expecting today on Election Day?
Finally, South Koreans are going to see an end to the political uncertainty over the past 6 months, a leadership vacuum that led to 3 acting presidents to go through. Today, I'm here in one of more than 14,000 polling stations. This one is near Yeouido in the National Assembly in central Seoul. And remember, that was ground zero during the protests against the martial law declaration of ousted President Yoon Suk-yeol. Already this morning, the National Election Commission says that 8 million voters have cast their ballots. We're talking about 18% of South Korea's electorate. And add to that the 15 million people that already voted last week during early voting. There's an incredible amount of interest in this snap election. Of course, not surprising given the ongoing turmoil and protests that we saw over the past 6 months. Not surprising that police have deployed almost 30,000 officers across polling stations nationwide. It's a public holiday today. We'll continue to watch the voter turnout as, of course, the presidential race itself has really narrowed with the frontrunner Lee Jae-myung of the opposition Democratic Party still leading, but of course the runner-up of the conservative ruling People Power Party also trying to catch up, Kim Moon-soo.
Sherry, Korean assets have rallied leading up to this election, but what's the state of the broader economy?
It's been really interesting because we saw Korean assets just gain ground ahead of the elections. Today, markets are closed, but the broader economy has seen signs of deepening fragility. We're talking about the Bank of Korea downgrading the growth forecast for this year to 0.8% from more than 1.5% growth for 2025 just in February. So not surprising, this is top of mind for voters across South Korea. I spoke to one person who just cast his ballot ballot about an hour ago. He told me that he is now changed his vote for a different political party because he was not happy with what happened during the impeachment process. He also liked the promises made by the candidate that he voted for when it comes to his generation, people in the 30s and 40s. He also liked housing policies of the candidate that he chose. Of course, it's not only about the domestic economy, it's also about external pressure. So Lee Jae-myung, the front-runner candidate, has already talked about making trade his top priority in his first 100 days in office if elected.
And Sherry, in terms of foreign policy, what kind of shift are we expecting depending on who wins?
Whoever wins this presidential election will have a very difficult balancing act when it comes to China and the United States. We have heard from Lee Jae-myung wanting a solid alliance with the U.S., but his approach is more nuanced. He also wants stable ties with China and with China, not to mention, of course, Russia as well. He says that South Korea cannot really be bound to unilaterally to the United States. They want to avoid having really unnecessarily hostile approach to Beijing and Moscow. He wants dialogue with North Korea. Of course, that could be more tricky given Pyongyang's deepening alliance with Russia in its war in Ukraine. Rival Kim Moon-soo, though, committed to prioritizing relations with the United States, also with Japan, also supportive of Korea shouldering more of the cost of having almost 30,000 U.S. troops stationed in South Korea. So if we do see that change in power from the conservatives to the more left-leaning Democratic Party, we could see big changes when it comes to the diplomatic front as well.
Sherry, thank you so much for that. The Asia Trade Co-anchor Sherry An in Seoul. And we have Richard Koo from Nomura is still with us. Richard, we know that South Korea, among those countries, watching those negotiations within the U.S. and China really, really closely because of supply chain disruptions, in particular for Korea. It has to do with tech. I know 60% of memory chips of the world actually comes from South Korea. How much is at stake when you take a look at the upcoming talks between the U.S. and China?
Well, you talk about Korea, now you're talking about China.
Yeah, I mean, how much is at stake for a lot of countries like Korea when it comes to those talks that's coming up?
Yes, if you're in a really high-tech industry, I'm sure the price elasticity of your product is pretty low. So even with tariffs and higher prices, they can probably sell those things because there's no other suppliers that can supply them those products. But if you're exporting those products with high price elasticities, and there are many other producers producing the same thing at the same time, then of course you're affected very badly. And in the Chinese case, there are some areas that they are very good at, but there are huge other parts where the price elasticity is actually high. The Vietnamese can produce the same thing, and Indians can produce the same thing, and those areas are affected very, very badly in China today. And that is added to their own domestic problems, where the Chinese economy has been doing very poorly. So the two together, I'm sure, is one of the key reasons why President Xi Jinping wants to talk with Mr. Trump to make the situation a little better.
China's fundamentals this time round are different from the fundamentals when they had the first trade war with the U.S. Yet China's talking about how it is prepared for a longer trade war with the U.S. Is it realistic for China to think it can overcome the challenges?
Well, I'm sure they will come out to say those things to show how strong they are. But their economy is suffering from what I call balance sheet recession. Balance sheet recession is no ordinary recession in the sense that it only happens after bursting of a bubble. During the bubble, people borrow tons of money to invest in all sorts of assets. And once bubble bursts, your liabilities are still here, but your assets are down here, and your balance sheet's underwater. And if your balance sheet's underwater, you have to come out of this as quickly and quietly as possible before everyone notices it. But so how do you come out of this balance sheet's underwater? You either increase savings or reduce your debt. And the fastest way, of course, is to reduce your debt. That's the right thing to do at the individual level. But when everybody does it all at the same time, we fall into a fallacy of composition problems in that in the national economy, if someone is saving money or paying down debt, you have to have someone on the other side borrowing and spending money. And in the usual circumstances, the central bank will lower rates, raise rates to make sure that all the saved funds are borrowed and spent so the economy can move forward. But in what I call balance sheet recession, central bank bring rates down to very low levels. Still, too many people saving, too few people borrowing. And we have that situation in China today in that if you look at 10-year government bonds, Chinese government bonds, it's yielding, what, 1.6%? For a developing country with still so much investment opportunities, for government bonds to be down to 1.6% is a ridiculous rate. It should be much, much higher. And we had the same thing in Japan, 1997. Bond yields came down to 1.7. And I was trying to warn the government that this means nobody in the private sector is borrowing and spending money. Government has to come in to make up the gap because private sector with balance sheet problems cannot change their behavior. They have to repair their balance sheets as quickly as possible. Well, Prime Minister Hashimoto, who I was advising at the time, listened to the IMF and the others who said, cut the budget deficit, cut the budget deficit. So instead of increasing the deficit, which I recommended, they cut the deficit, and the whole economy collapsed. We have 5 consecutive quarters of negative growth, complete breakdown in the banking system. So Chinese are aware of this experience, what happened in Japan. And so if you talk to many Chinese economies, they talk about balance sheet recessions all the time. But the government has been still reluctant to do the right things, that is, say, borrow massively and spend massively to make up the difference, because Chinese government is already having a huge deficit. 7% of GDP if you put the local government together with the central bank. And I think that's where things are kind of stuck in the sand, as it were.
Richard, you brought in Japan, JGB's in focus. What if the government issues fewer long-term debt? How might that play out?
Well, the 30-year bonds in Japan, the yield did spike up. But if you look at 10 years, where a lot of people pay most attention to, it's not that bad yet. But Japan, I think we all learned a lesson that all these economists used to say, as long as Japan got inflation, everything's fine. I'm sure you heard this a million times over. But it was complete nonsense, because now we have inflation in Japan. Everybody's so unhappy. The LDP, the Liberal Democratic Party, lost badly in the election early this year because everybody starts saying, especially this inflation is hurting households' food prices. And that comes from this weakness of the yen. Japan imports so much food, and the price of those foodstuffs have gone up in terms of yen. And so now, Japanese government is moving away from this inflation was a good idea into inflation was a bad idea. And that's allowing Bank of Japan more freedom to act. So if it were not for the tariff issues, I'm sure BOJ would have moved to normalize monetary policy a lot sooner.
Very quickly, I'm just wondering, how many rate cuts do you see, rate hikes do you see from the BOJ this year?
That would depend a lot on the tariff issues, because Japan is also a very export-dependent economy. And with so much uncertainty in that sector, I'm sure Bank of Japan will be very cautious, even though it really wants to raise interest rates to normalize monetary policy.
Richard, we have to leave it there. Thank you so much for your insights today. Richard Koo, Chief Economist at Nomura Research Institute. We're coming to you from the Nomura conference, of course. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Nomura Investment Forum here in the Lion City. Now, Senate Republicans are considering making significant changes to President Trump's tax bill. Senators are looking into the potential impact of a so-called revenge tax buried in the fiscal package. The provision would increase tax rates for individuals and companies from countries whose tax policies the U.S. deems discriminatory. Some of Wall Street worry this may discourage foreign investors. Well, joining us now is Mick Mulvaney, who served as acting White House Chief of Staff during Donald Trump's first presidency. He was also a four-term U.S. congressman and a former director of the U.S. Office of Management and Budget. Of course, the big and beautiful bill front and center. How do you see this playing out? Are we set for a showdown?
Yes, no question. Keep in mind, as soon as the Senate changes anything that the House has sent them, then it means it has to go back to the House. The Senate is under no way, no circumstances, ever going to accept what the House sent without any changes. So this is just round 2 of at least 3. I think, Haslinda, that this July 4th date is completely artificial. The important date is this. Buried in this bill is the increase in the debt ceiling. Scott Bessent has said that the Treasury runs out of money, I think, effectively sometimes in mid-August. That's the real date here. That's the hard deadline. July 4th is a PR date. It's the 250th anniversary of the founding of our nation. So 249th, maybe. So I'm getting my math wrong. So the July 4th date is there for press purposes. It's that X date for Treasury that is the real deadline here.
Realistically, how will this play out?
The Senate will change it. And then the House will have to take the changes that the Senate has taken. They will pass something. These, after all, are the Trump tax cuts. They are his signature legislative achievement from his first term and from the second term. This would be like Barack Obama defending Obamacare. Trump will get his tax cuts extended. What it looks like, what goes along for the ride as part of the one big, beautiful bill remains to be seen.
The question is, at what cost? We know that Moody's downgrade was based on that fiscal concerns. I mean, how do you see the U.S. economy performing from here amidst the passing of that big and beautiful bill?
I think the Trump team is probably not watching the equity markets anymore. Keep in mind, he's not running for re-election, so sort of the popular culture of following the stock market won't affect his actions. The bond markets, however, are a different story. If they have continued soft auctions, they had a soft auction on a 3-year a couple weeks back. I think that led directly to the first 90-day pause. They had a rough 20-year auction a week before last one. I think we saw 105 basis points up on the 20-year. Those are the types of things that get the Treasury's attention. And when it gets Scott Bessent's attention, it's going to get President's attention.
So big and beautiful on the one hand, we have also the expected talks between Xi Jinping and Trump later this week.
Yeah.
Do you think it will happen?
I'd be curious to see if they do happen. As you and I were talking off air, I think there's a fundamental disconnect here. Trump wants to talk at the very highest levels. That's not always how the Chinese want to do business, and I'd be curious to see if they're able to make any headway. Trump doesn't want to go through the back channels. He doesn't want to go through the ordinary course of business. That's never been his style as a leader, being in business or in his first term in office. He wants to talk to the principal. He wants to talk to President Xi himself. So we'll be curious to see if the conversations that the White House has telegraphed actually do take place.
I just want to put it out there. We've not heard from the Chinese about this talk coming through. I mean, what are the chances that the two sides can find a common ground?
Yeah, it's an ancient Chinese saying that it takes two to tango, or is that an American sign?
Can they de-risk without decoupling?
They're going to have to, at some point, they're going to have to find that middle ground. They're going to have to find a way to speak to each other that satisfies both sides. I do not see them being able to pull off a deal the old-fashioned way, which is going through the back channels. And I think it'd be very difficult to do a deal going the Trump way, which is only Xi to Trump, man to man. So they're going to have to try and find a way to sort of split the difference.
How much pain is the U.S. willing to go through to get those concessions from China? We've constantly talked about how China is in for the long haul. It is prepared. It's been preparing for the last 7 years.
I think that goes back to the issue about the equities versus the bond markets. I think if the pain is in the equity markets, the answer is quite some time. That Trump is ready for that. He's tried to prepare people back home for that, to take a hit maybe to what their 401ks, their IRAs might look like. The bond market's an entirely different story. You could see very quick change in American policy if you see something bad happen on an auction for a Treasury.
There's been a lot of questions on whether or not we're going to see stagflation in the U.S. economy. Do you see that? I mean, I had a conversation with Jamie Dimon, who says that we should actually prepare for that.
Well, I mean, look, Jamie, Jamie Dimon struggles with his credibility in Washington, D.C. because he's been for all of the spending that got us here in the first place. So it's sort of hard then to sort of change gears and say, oh, now it's time for fiscal austerity.
But Jamie Dimon's also the
forth.
man that Trump says he listens to.
He listens to, yes, he does. There's no question. I want to diminish that in any fashion. Trump listens to a lot of people. There's no question. Trump also watches the markets. He also watches the inflation numbers. The inflation numbers we got this past week or week before last, I lose track, I've been traveling, were actually a lot more benign than people realized. We thought that maybe the tariffs would have hit consumer prices by now. They haven't. Will they spike up next month? Maybe. But if you see a couple more soft months on the inflation numbers, it will just embolden Trump to continue what he's doing.
And do you think the U.S. is comfortable with the dollar where it is right now? We have the likes of Morgan Stanley saying the dollar will weaken 9% by mid-2026.
Look at it this way. Donald Trump has been a soft dollar guy his entire life. I've had these conversations in the Oval Office with the president dozens of times. I was a king dollar guy. So was Larry Kudlow. We lost those arguments. Donald Trump does believe in a softer dollar for the purposes of boosting American manufacturing and exports overseas and so forth. So you can expect the White House to continue to talk down the dollar just about any chance it gets.
I want to talk about Doge and what it's been wanting to do. It's something you yourself embarked on when you were with the Trump administration the first time round. How do you think Doge has done in managing those costs, in bringing in costs down?
Yeah, I think it's done a lousy job in actually bringing down the costs, but it always was going to do that. I've said from the very beginning that at the end of the day, and we are now at the end of the day for Elon Musk, he will find it easier to get to Mars than it is to fix the federal government. And that's because he doesn't have the tools. Doge didn't have the tools. The executive branch doesn't have the tools to do what they wanted to do, which is actually save money. Only Congress has that tool. But it's been a roaring success at another level, which is at the PR level. It's now cool. It's now popular to talk about government waste, government efficiencies in Washington, D.C. That was one thing I was never able to do when I ran the Office of Management Budget. Nobody cared about it 8 years ago. Now they do care, and that's the first step to actually fixing things. So did Elon Musk actually save any money? No. But did he set the stage for us to possibly actually start to fix things? Yes, he did, and that has to be seen as a success.
But where do efforts go from here with Elon Musk now pulling back from his responsibilities at Doge?
Well, I mean, Doge will continue. Keep in mind, Doge is under the Office of Management Budget now, as it has been in the first place. I think that Elon will continue to be one of those voices. You mentioned Jamie Dimon before. Elon will continue to be one of those voices that Donald Trump certainly listens to. He just won't be in the building every single day. And keep in mind, geography has a lot to do with your influence in Washington, D.C. Proximity to the president counts, and Elon won't be nearly as close physically as he was before.
Mick, we've been talking about negotiations within the U.S. and China. We know that when it comes to Elon Musk, he has huge businesses, presence, footprint in China with Tesla.
Yeah.
Is that a liability for the U.S. in its negotiations with China?
It's certainly leverage for the Chinese. I can't tell you during the first term, I mean, it was a daily sort of march of corporate CEOs from Wall Street into the Oval Office trying to convince Donald Trump to go softer on China because that's where they were making a good deal of money. That will simply continue. Is it new? No. Is it sort of higher profile because it's Elon Musk? Yes, it is. But there have been interconnections between these economies for decades now, and you're going to continue to see that play out during these tariff discussions.
You've been involved in these discussions. You have connections, networks. You know, back in 2019, we had Henry Kissinger talk about how the U.S. and China were on the foothills of a Cold War, and increasingly we're seeing signs of that, you know, inching ever closer to that.
Yeah.
What's your take on that?
Well, if we get there, we know how to win it. It's always been one of my
How?
questions. We beat the Soviet Union in the Cold War. You don't do it by doing business with them. You do it by effectively beating them economically. Can you do that to China? I think it may be too late to use that same playbook. But one of the questions I think that many conservatives in my country, not necessarily within the Trump administration, but conservatives are asking is, why are we treating China differently than we treated in the Soviet Union? It's a communist nation. They clearly have sort of their sights set on a bigger place in the world stage, much as the Russians did. Why are we treating them differently? Certainly the outcome has been different, but that's all part of the mix. It's not 1978 anymore in my country. It's not 1978 anyway. But it is certainly part of the debate back home.
How can the two coexist?
I think they can. I absolutely think they can. They have to work through this right now. Sooner or later, look, China has to stop. China has to become a leading nation of the world. They can't steal people's intellectual property. They can't force you into bad deals in order to do business in your country. They can't hide information when they deal with pandemics like they did with COVID-19. First-tier nations of the world don't do that. And if China is going to become a first-tier nation, they need to step up their game. Until that point, I think you'll see America deal with China differently than they do with everybody else around the world.
Great insights. Thank you for joining us today. Mick Mulvaney, former White House Chief of Staff under Trump. Now, let's get to Avril with the very latest on those JGBs. Avril.
Yeah, Has, we just had the results of that 10-year auction, and markets obviously were keenly anticipating these reactions or results. We've seen that in terms of the bid-to-cover ratio, it's higher than the one-year average. So perhaps putting to bed a little the concerns of the markets that there wouldn't be enough. But as your guest earlier, Richard Koo from Nomura, highlighted, 10-year, that seems to be, you know, a bit of resilience there, where the concerns are really on the 30-year, the longer end of things. And we're seeing, if you flip the board, the concerns continue on the 30-year because we also have that auction that is due on Thursday. And of course, amid all this, we've heard from the BOJ Governor, Ueda-san, and speaking today, not really allaying or offering any comfort for bond market participants, saying that in a recent survey, they pretty much saw fit that they will keep at the tapering of bond purchases. So again, as the BOJ has been taking its foot off the stimulus pedal at a time where Japanese fiscal sustainability has been called into question, to what extent is the market going to be able to absorb the supply that's coming through? We're seeing dollar-yen. A day ago, we saw that sharp climb. Don't forget, a bit of reversal today because of the anxiety ahead of the bond auction. We're seeing a bit of weakness seeping through into the Japanese currency as well, Has.
Great. Thanks for the update, Avril. Again, the 10-year JGB saw a demand ratio that was higher than its one-year average. Still to come on the show, New Zealand's former Minister for Economic Development will tell us why he thinks most new applicants for the country's golden visa are Americans. Keep it here with us. This is Bloomberg.
Continues to be really good for us. We're up about 103% on passenger numbers from where we were in 2019, and it's gaining momentum. I'm not seeing anything at the moment that would indicate any concerns I've got, you know, that I read about. Anecdotally, I hear that a number of people in the US are very keen to come to New Zealand.
What about New Zealanders going the other way?
Yeah, no real issues with that. That we're seeing. So it remains good, remains strong, and of course New Zealand not only is clean and green and all the things that we know about, but it's pretty stable and safe too. So I think that heralds well.
That was Air New Zealand CEO Greg Foran talking with Bloomberg's Guy Johnson about the demand for travel into New Zealand, especially from the US. Now, New Zealand's Immigration Department says demand for its revamped Golden Visa program has soared amid rising geopolitical tensions. It's received dozens of new applications since April, with most coming from the US. For more on this, let's bring in former Minister for Economic Development, Stuart Nash. He now runs a consultancy helping high net worth immigrants settle in New Zealand. Stuart, good to have you with us. Talk to us about what you're seeing on the ground.
Well, all your listeners and your viewers know that America's polarised at the point in time, more so than it's been for a long, long time. We've got many Americans wanting to settle in New Zealand. As Greg Foran said, we're seen as a safe country. For example, our police don't carry guns. There's never been a school shooting in New Zealand. We've got a first world banking system. We've got a very stable government. And of course, we've got a very pristine environment. The sort of things that Americans like. And, you know, we're seen as an oasis at the bottom of the world. And at this point in time of global uncertainty, geography is just as important as anything else, I would say.
I'm just wondering how New Zealand itself is making itself attractive to these Americans and other potential residents and citizens.
Well, we don't necessarily have to make ourselves attractive. I think we are by the very nature of the fact that we're 10, 12,000 miles away from the world's trouble spot. You had Keir Starmer come out and talk about putting his armed forces in on ready just in case Putin does something. You've got a very high level of uncertainty in the Middle East, obviously, South China Seas, who knows what's going to happen there. And obviously the US is probably more polarised than we've seen for a long, long time. You jump on a plane, it takes a while to get to New Zealand, but by virtue of that, you're a long way away. So what we see at Nash Kelly Global is a lot of people are telling us they are looking for a safe haven. I mean, in the past, a lot of these people were looking for tax havens. Now they're after a safe haven for them, their family, and also their money and their wealth.
You got to wonder how the Kiwis themselves are looking at this. I recall back in 2018, there was a debate sparked by billionaire Peter Thiel, who some say didn't meet the requirements to be a citizen there or residency, to have residency in the country under the administration of Jacinda Ardern.
It's changed a lot since Peter Thiel's day. And in fact, Peter would not get that visa or get citizenship under the current rules. So the one thing about New Zealand permanent residency that you can get is you never have to reapply for it. And what a lot of our clients at Nash Kelly Global are telling us is that is incredibly attractive. Once you have New Zealand permanent residency, you've got it for life. But the system does have a high degree of integrity. For example, you've got to prove that the money is legitimately gained. You've got to go through health checks. So it's reasonably onerous, but we think that's important, so the system does have integrity. New Zealanders love this. I mean, by and large, the people who are coming over, they're not competing with first home buyers. They're competing with the lotto winners and the very high-end businessmen. So all the Nash Kelly Global clients that we're getting love what they're buying into when they come to New Zealand. As we say, pristine, a world away from everything, like an oasis at the bottom of the world in these troubled times.
You got to wonder about the optics, though, right? I mean, you're welcoming the wealthy into the country at a time when unemployment is close to record high, and these people are likely to drive property prices higher.
We're not seeing the number of people who would drive property prices across the country high. And keeping in mind, for me, it's not just the money they bring in, and they've got to invest it in New Zealand businesses or funds. It's actually the competency and capability and experience. So what we're seeing here is men and women who have actually been very successful in their own country, coming to New Zealand and leveraging a lot of that experience to help New Zealand businesses grow. And again, a lot of the Nash Kelly Global clients are telling us that they love coming over here, helping businesses. It's almost like a mentoring role. So if you're going to invest sort of 5 million Kiwi or 3 million US, you want to have a little bit of an active say in how this works. So there aren't the numbers coming over to really skew house prices in any way, shape or form, but there are the numbers that are coming over to make a noticeable difference to a number of New Zealand firms that want to internationalise. It's a great scheme, actually. New Zealanders, by and large, are welcoming. We're known globally as a really friendly people, and that's true. And it's the same for people who are coming over here and want to be part of New Zealand as well.
Stuart, I want to talk about the Hollywood tariffs. Trump intending to put tariffs on movies made overseas, and we know that a lot of those Hollywood movies are made in New Zealand. How do you see this playing out? What ripple effects do you see?
Well, because we understand President Trump has actually released these sort of thoughts on Truth Social. We know it's not a policy yet. If it was to become reality, then it would probably decimate the New Zealand film industry, to be honest. And we've got Peter Jackson, obviously Lord of the Rings, The Hobbit. We've got the Avatar made here. Some very, very big movies, big Hollywood movies are made in New Zealand. We've got actually Brad Pitt's over here at the moment, I understand. Minecraft has just been made. But we're just waiting and seeing how this would play out. We understand what President Trump is trying to do. We think it would be very, very difficult to put a 100% tariff based on overseas movies. So we're just waiting and seeing how this plays out. And we hope that common sense will prevail, because we have a lot to offer here. We have a fantastic film crew here. There's about 24,000 jobs. 3.3 billion Kiwi. It's a pretty big part of our economy. It's not an American policy yet. We understand President Trump is just floating the idea, so we're just waiting to see where this goes.
The thing is, you oversaw about $650 million in film subsidies under the Biden administration. Do you see this time around possibly that the Prime Minister would retaliate, and what are the options?
No, there's no point in a country like New Zealand retaliating against a country like the United States. There's nothing to be gained from doing that. You know, New Zealand actually has a very good relationship with the United States. Our foreign minister, a guy called Winston Peters, is a very seasoned and very professional politician. He's been dealing with the United States for many years now. The relationship between our two countries is very strong, and it goes back a long way. I just do not see any New Zealand government seeking to retaliate on any measure put in place by the United States. We're too small to make a difference. So, you know, we tend to negotiate as opposed to retaliate.
Even as you adopt a wait-and-see attitude, I wonder if you see a possible impact on tourism as well as the broader economy.
Well, about 19% of American tourists who came to New Zealand pre-COVID came because of what they saw in Lord of the Rings. So there's no doubt about it that the movie industry has flow-down impacts into the tourism industry. But as the CEO of Air New Zealand, Greg Foran, mentioned earlier, we're only seeing an increase in the number of Americans who want to come to New Zealand for all the reasons outlined. It is a long way away from home, but it's a bucket list holiday journey for many people. At Nash Kelly Global, we have our own ultra high net worth luxury tour package. We're seeing an uptake in that. This is Americans just getting away from the hustle bustle of, you know, the big cities, the New Yorks, the LAs, and coming to New Zealand, just experiencing the tranquility that is very, very difficult to find anywhere else in the world.
As it stands now, though, how's the Kiwi economy looking amidst all the tariffs and trade negotiations happening right now?
Yeah, look, there are bumpy wins. There's no doubt about that. We're coming out of a slow period. We're an agricultural-based nation. We're an export-based nation. People want to buy our protein. They want to buy our milk. They want to buy our meat. They want to buy our dairy products. So an export-led economy is going reasonably well. And keep in mind, due to the size of New Zealand at this point in time, we tend to focus on the ultra-premium end of global markets. What we're finding is consumers around the world, as they become more engaged and enabled and educated, they tend to seek products that have a very high efficacy and high integrity, and that's what New Zealand prides itself on. Again, it's what a lot of my clients at Nash Kelly Global are telling us. They want a country where you get, you know, grass-fed beef, where you know your dairy is from cows that wander around paddocks as opposed to in stalls. We have it all in New Zealand. I know I'm a great advocate for the country, but it really is the sort of place where you get everything you read about in the magazines and hear in the wonderful TV programs like your own.
Stuart Nash, thank you. Stuart Nash, former New Zealand Minister for Economic Development and co-founder of Nash Kelly Global. A quick check on Adani stocks. Most of them are under pressure on the report of U.S. probe over Iranian LPG import. That is it for Insight. This is Bloomberg.